In today's video, we're going to run down the 5 ways that you can invest in digital assets, even if you have no idea what you're doing. All right, so you're new to crypto and you're looking at all this and it seems way more complicated than you anticipated, right? You got to move it to a cold wallet. Which exchange do I use? How do I secure my passwords? All this crazy stuff that you have to deal with in digital assets today, which, in the future, I think will become much simpler. Or maybe you're just on Robinhood, or you're on an exchange, you're on Coinbase for the first time. And you're like, how do I even pick which one of these to invest in? Well, I'll tell you, when I first got started, I did some research, right? That was the first key. I started watching people on YouTube. That's probably why you're watching this video. You're thinking, okay, how do I figure out what I need to be doing, which of these to buy, all that stuff. So you're going to do some research. That is the main thing. If you don't take anything else away from the video, I would start there and really drill down and figure out your thesis behind why and how you're going to invest in these tokens, and then move forward with one of these strategies, right? So the first one is going to be dollar cost averaging. A lot of people like to try to pick tops and bottoms and keep a bunch of cash or dry powder on the sideline and deploy it at just the right time, or they liquidate a position and then the market keeps going up. Averaging in and averaging out is by far the most effective way that I have made money in crypto. 2020 and 21, I made a lot of mistakes. I've told my story in the past. I'm sure people have listened to it. If you haven't, go check out previous videos here on this channel, and I'm sure it's in there for you. But the most effective way that I've found to be able to be profitable in digital assets is to just dollar cost average in. And then again, scale out on the way out and not just liquidate my whole bag and miss the upside. So it depends on what cadence you get paid on, how much you want to allocate to these types of investments. But I would have some schedule or cadence in which I deployed capital into the market. Maybe it's every single week. I buy $100 and it's across a couple different tokens, or one token in particular that I am dead set on, right? If you got more money than that, maybe you're able to do it daily. Or maybe you add, maybe it's $1,000 a week or $10,000 a month, or whatever it is, on this day or at this time, I'm going to go in and I'm going to buy this. And I'm not even going to look at the price, because I believe in the long-term vision of this asset class, or this asset in particular, or these couple assets that I'm investing in. And with that, I'm able to get exposure. I'm not going to have to worry about, trying to pick tops and bottoms. But I know that I'm in the market and I'm going to get the appreciation over the next 4 or 5 years as things play out. The next thing that I think that we're going to see in the very near future are crypto indexed funds. So we've got these ETFs and they're spot ETFs right now, but there are a couple different options out there that I think are going to come to the market here in 2025, where they just pick the top 20 tokens, similar to like the S&P 500 or the NASDAQ. There's going to be, the top performers in a space. You're going to get spread across those inside the index, and then you'll just get a blanket exposure to the asset class. I think that that's going to be a very popular way that people get exposure to this asset class in the very near future as we get regulation in the space. Another thing that I looked at, and this is really how I made money in 20 and 21, was value investing. So I talked about doing your own research, finding companies, finding tokens that you think are undervalued in comparison to their long-term potential. And then those would be where I would DCA, or just, if you think today is a good opportunity and you got the liquid capital, buy and hold. You're looking at a 4 to 10 year time frame, because that's investing. It's not trading. Anything less than that, I would actually consider trading. And you might do long-term swing trades. People are very profitable on that too. But if you are in this space for the long term, you definitely need to be value investing. And value investing is something that Ben Graham came up with. Warren Buffett is a student of that. Him and Charlie Munger have been using that their entire careers and have been wildly successful. They pick things that they think are slightly undervalued or at a fair market value in comparison to where they're going over the long term, and they buy in now, and they get large chunks of that as they can. And they've done really well with that when it comes to, Geico, you got See's Candy, you got Coca-Cola, and these are all things that have paid them dividends. So that kind of relates to the next thing. So you're going to be looking at things that are going to pay you some money here in crypto, and that can be done a bunch of different ways. But the main way that everybody is familiar with is called staking. And there's a lot of different types of staking. There could be, staking pools that you're making, money by allocating to the staking pool. Like for ETH, you got to put up 32 ETH to even qualify to participate in the pool. And then, upon the efforts of somebody else that's validating transactions, they're going to pay you a return or yield because it's a guarantee over a certain period of time. Same thing when it comes to Solana. You're able to, use a delegated proof of stake for Solana. That's also the same thing for XDC. If you got 10 million of them, you can delegate that XDC to a node on the network, either a standby node or a master node, and earn 8 to 10% per year paid back in the same token. Right. And there's a lot of things around the taxes there that we talked about again in previous videos if you want to go check those out on the channel. But that's another great way to look at this if you're looking for passive income. And I think, people, it's one of the three things I look at when I'm making an investment. I want real returns on my investment. So it's got to keep up with inflation or do better than that, which crypto definitely has over the past 15 years here, far, surpassed any other opportunity in the market as far as an asymmetric bet, Bitcoin in particular. But you don't get, income off your Bitcoin, right? So that's why a lot of people have looked at Ethereum or other tokens like I just mentioned, Solana, where you can get staking rewards for participating in the network. Flare protocol is another fantastic opportunity there. Not great on the returns on the asset itself up to this point, but I do think that may change in the future. None of this is financial advice, only for entertainment and educational purposes only. Always speak with a financial advisor before making any investment decisions. And you can do that with Digital Ascension Group. We have digitalwealthpartners.net. You can reach out to our financial advisors if you're looking for somebody to tell you, what to do with your digital assets and how to allocate your capital. So, and then the last thing that I want to mention here that I think is also going to be extremely popular and already has been in the past are going to be DeFi protocols, right? Yield farming, liquidity pools, borrow, lend. There's going to be a ton of arbitrage opportunities with AMMs and other things in the very near future. Especially, again, as we get regulation around this space, I think you're going to see a flurry of projects pop up across, whatever chains end up winning out. They're going to introduce significant DeFi projects across the board as things progress here and the banks move their way in. They're not going to be left behind. So with that, if you are playing in DeFi, just be aware of the risks. Smart contracts can be hacked. We have seen people lose money. There are lots of Ponzi schemes out there. So again, this kind of goes back to doing your own due diligence and verifying the team and the partnerships that they have and the validity of the project before you're participating. And again, if you don't want to get into the nitty gritty, it's probably best to just keep it simple, invest in a couple assets, dollar cost average, or again, as the indexes come up here in the next 12 months, maybe that's a good opportunity for you as well. So those are the 5 ways. You've got dollar cost average, looking at crypto index funds this year. You've got value investing, which again is really kind of how I made my money in 20 and 21. I looked at the stuff that I thought was going to be doing very well over the long term and made investments that way. Dollar cost in, dollar cost out. Staking, if you're looking for, cash flow and returns on your stuff, as well as DeFi, the protocols there with all the different crazy stuff that's out there. Just be careful on that one. Or you can wait for institutional DeFi, which I think may happen here in 2025 as well. So hopefully this has been valuable for you. If it has, please like, subscribe, and we'll see you guys on the next one.